Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Federal Realty Investment Trust Annual Report. Federal Realty Investment Trust offers a diverse range of businesses and services through its portfolio of high-quality retail-based properties. At the core of their operations are open-air shopping centers, which provide a vibrant destination for communities. These destinations include Santana Row, Pike and Rose, and Assembly Row, among others. In addition to these retail spaces, Federal Realty also develops mixed-use destinations that combine residential units with commercial space. As of 2025, they have approximately 3,000 residential units across their properties. This integrated approach allows the company to create thriving communities where residents can live, work, and play. The company's portfolio spans over 103 properties, totaling 27.9 million square feet of commercial space and housing around 36,000 tenants. Federal Realty's commitment to investing in underserved regions has enabled them to tap into strong economic and demographic fundamentals, driving long-term growth for their shareholders. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to remain stagnant over a period of time. The stability of a stock's price is often influenced by various market and economic factors. One possible reason for a lack of significant change in Federal Realty Investment Trust's stock price over the past year could be a stable economy with moderate growth rates, which may not be exciting enough to drive up demand for the company's shares. Additionally, if the company has not made any major announcements or changes that would impact its financial performance, investors may not see a compelling reason to buy or sell the stock. Another possible explanation is that Federal Realty Investment Trust operates in a relatively stable industry with low volatility, which can lead to a lack of significant price movements. The company's focus on owning and managing high-quality retail properties may also contribute to its stable stock price, as investors tend to favor companies with predictable earnings and cash flows. Furthermore, the overall market conditions and investor sentiment can also play a role in determining a stock's price movement. If there is a lack of interest or enthusiasm among investors for the company's shares, it could lead to a stagnant stock price. Conversely, if the company has made significant investments or announcements that are not yet reflected in its financials, it may take time for the market to adjust and drive up the stock price. In conclusion, there can be several reasons why Federal Realty Investment Trust's stock price has remained relatively stable over the past year. A combination of these factors, including a stable economy, low industry volatility, and lack of significant company announcements, may have contributed to this trend. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The net income and profit margins of Federal Realty Investment Trust, FRT, underwent significant changes between 2024 and 2025. While the company's total cash reserves decreased from $135.4 million to $117.7 million, its cash paid for interest increased by $2.6 million. This suggests that FRT may have taken on more debt in 2025. The acquisition of 4 new properties in 2025, including Del Monte Shopping Center and Crossing and Town Center Plaza, likely contributed to the company's increased expenses. However, the company capitalized $13.2 million of interest expenses in 2025, which could help reduce its net income. Despite this, FRT's financial performance was not significantly impacted by these changes. The company's profit margins may have been affected by the adoption of new accounting standards, including ASU 2020-6, which affects the accounting for convertible debt instruments. However, the report does not provide detailed information on how these updates impacted FRT's financial statements. Overall, while FRT's net income and profit margins underwent changes in 2025, the company's financial performance was relatively stable. The acquisition of new properties and adoption of new accounting standards may have contributed to some fluctuations, but their impact is not clear from the provided information. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the latest data, the net cash provided by operating activities has reached $622,378 in 2025. This significant amount of positive operating cash flow is a clear indication that the company is successfully managing its day-to-day business and generating sufficient funds to support its growth. The management at Federal Realty Investment Trust, FRT, is optimistic about the company's outlook. According to the annual report, FRT has made significant progress in expanding its real estate portfolio through strategic property acquisitions. This expansion is expected to drive growth and increase revenue for the company. In terms of strategy, the management is focused on diversifying the company's assets and improving operational efficiency. The financial highlights section of the report shows a steady increase in net income and funds from operations, FFO, indicating a strong financial performance. Additionally, the management has emphasized the importance of maintaining a high level of transparency and compliance with accounting standards. Overall, the management is confident about FRT's ability to navigate the current market conditions and achieve its long-term goals. The company's commitment to delivering value to its shareholders is evident in its strategic approach to property acquisitions and financial management. The acquisitions made by the company include several notable purchases. On page 72, it is mentioned that 4 shopping centers were acquired at a total cost of approximately $650 million. These centers are Del Monte Shopping Center, Crossing and Town Center Plaza, Annapolis Town Center, and Village Point. Additionally, on page 79, Bethesda Row was purchased for $2.5 million. The company also has finance leases with specific terms, as mentioned in Note 4 on page 78. However, the properties involved are not specified. The interest rate for these leases is 6.5%, and they have a weighted average remaining term of 68.7 years. In contrast to acquisitions, the divestitures made by the company include the sale of 2 properties that were previously considered comparable. These sales occurred on page 38. Note 4 on page 78 also mentions operating leases with specific terms, but again does not specify the properties involved. The interest rate for these leases is 4.8%, and they have a weighted average remaining term of 53.7 years. On page 79, it is mentioned that Santana Row and Courthouse Center were sold for a total of $158.5 million. The company has a history of paying dividends, with references to it being a standard practice. This suggests that shareholders can expect regular returns on their investment. In addition to paying dividends, the company has also implemented a new common share repurchase program in April 2025. This indicates that the company is committed to returning value to its shareholders through both dividend payments and share buybacks. Supply chain disruptions pose a threat. The extracted summaries reveal concerns regarding supply chain disruption, which can have far-reaching consequences. Public health crises and natural disasters can cause significant disruptions in supply chains, page 11. Furthermore, unexpected impacts of tariffs can also affect tenants' ability to pay rent, leading to potential supply chain disruptions, page 38. Additionally, there is a possible concern due to the significant impacts from supply chain disruptions, page 37. These issues highlight the vulnerability of supply chains and the need for contingency planning. That concludes the financial summary for Federal Realty Investment Trust. Feel free to comment below, and I will be happy to answer them when possible.